All right, financing options are such a big piece of your home buying journey and something that we need to take a look very seriously at, especially in a market where we're seeing interest rates moving in an upward direction. So something that we want to use is using some comparisons. We use a program called Mortgage Coach, and what Mortgage Coach can do is we'll show you some side-by-side comparisons to show you what a payment would look like, what your down payment would look like, and really give you a full picture of what options might be available to you. For example, we're going to look at a fixed interest rate. That's a fixed rate for over a 30-year period. We're also going to look at some ARM products to see if that might be something that might work best for you. Now, the ARM product is an adjustable rate mortgage. This is not the ARM product of yesterday. And I want to stress that because so many people had problems with adjustable rate mortgages back in 2008 that this is not that program. That program does not exist today. Today's ARM products are very safe. They're very secure. They come with a fixed interest rate for a 5-year or a 7-year period, where we would refinance you out of this loan during that period when rates come back down. So something that's very important to look at is why pay the premium of a 30-year fixed interest rate if you don't need that. Maybe an ARM product is something that that can work for you, and we'll use Mortgage Coach to illustrate that to see what's best for you and your family in your home purchase. So paying points, we see a seller paid buy down. This is something we can also show you in Mortgage Coach. The seller paid buy down is something that's very popular today. So because we're going to refinance your mortgage in the near future, we would rather not see you pay discount points, because the savings that you get in your monthly payment, you won't make that money back that you paid up front in discount points to get that lower rate. You won't get that money back during the time frame that you're going to be in this current loan that you're going to go into. So the seller paid buy down, though, is when we see buyers there's maybe fewer buyers looking at homes during this time period that we're in right now. The seller starts to look at that and say, wait a second, maybe I need to lower the price on the property. Rather than lowering the price, we could use a seller paid buy down and get you an interest rate of yesterday. So they can use those funds instead of reducing the price, because it's not going to reduce it enough to save you on your monthly payment to make sense for both parties. But the seller paid buy down can get you the rate of yesterday. The seller's paying it, so we can always refinance that loan. We're playing with house money on that, and we'll make sure that you benefit the most from this scenario. So it's a great opportunity here to look at that type of product. We're also going to use a program called Rate Alert. Rate Alert is something that we subscribe to for you that gives you kind of an indicator of what interest rates are doing on a daily basis. So it doesn't give you an actual rate, but gives you an idea of what the market's doing so that you can get an idea of, hey, are rates going up? Are rates going down? So we look forward to helping you on your finance journey here. And we look forward to sharing with you all the opportunities to see what works best for you and your family.